Hello, everyone, and welcome to Ancient Roman Trading Secrets with General Romulus. That's me, Romulus. This show is brought to you by Backpack Trader. Our goal is to help you become the best version of the backpack trader you can possibly become. What does it mean to be a backpack trader? Well, here's a note on our Discord from one of our backpack traders, one of our centurions. He lives in Michigan, but today he's down in Orlando getting ready for a Detroit Tiger game, enjoying the backpack trader lifestyle that the trading and investing techniques that we employ and teach allow our backpack traders and centurions to go ahead and do all through life. One reason our Centurion Nation gets to go ahead and travel the world and do what they want when they want is because they're not getting hit over the head and clobbered with trades like this. This company missed the target by just a little bit, a bit outside on that one. Target down 25% today. The stock is currently, I know you have to move the chart that much to show how bad they missed their target. The stock right now is trading all the way back to the same point that it was. You see that? November 2020. Woo! Now, you've probably heard the term, don't fight the Fed. That's something that I've been talking about lately. That means you don't want to be too heavily involved on the long side of the stock market while the Federal Reserve is raising interest rates, which they are currently doing. You may have also heard, don't bet against the U.S. consumer. So these are two conflicting pieces of old Wall Street advice. One, get out of the stock market. Two, stay with the stock market. Well, if the U.S. consumer is so strong, if the U.S. consumer is once again going to ride on the horse of victory to save the American economy, to save the stock market, then tell me this. Riddle me this, Batman. Why is one of the largest retailing companies in the country down 25% today? Why is the largest retailer in the world, Walmart, that went down 12% yesterday, another 5% today? Tell me this, if the American consumer is going to be so strong, let's look at Amazon. Amazon is now the second largest consumer in the world, consumer provider in the world. And again, just like with Target, we have to go way back to see how awful this stock has been doing lately. Just terrible. I mean, terrible performance. Check this out. The stock is now trading all the way back. You see that? April 2020. However, here's an interesting point. At the lows of last week, Amazon was trading lower than it was right before the COVID crash. Full retracement, everybody. Go back and watch some of the videos I've posted in the last month. I've been talking a lot about this. The bond market pulled a full retracement a couple of months ago. The bond rates went all the way back to where they were pre-COVID and then some. Matter of fact, again, we'll show more of this data in here. Okay. The bond rates went all the way back to where they were in early winter 2018. A full retracement and then some. So I've been speculating and wondering, well, what about everything else? What about Bitcoin? Could that go back to where it was pre-COVID? Well, let's find out. COVID, right before the COVID crash, we've got Bitcoin trading right here. You see about 10,000. Could it go to 10,000? Well, why not? It's down from 70 and it hit 25,000 a couple of days ago. Sure, that's possible. Okay, what about residential real estate? Well, here are the home building stocks. Okay, and look how awful they've been doing lately. And the general stock market itself. We know that it's been having some troublesome times with bears getting more to eat lately than just about any other category. So this is all possible. It's all very possible that everything retraces to where it was before COVID. And I mean everything. Everything out there. Yes, even your ATM/residential home for Western economies, it's possible. Not likely that home values will drop all that much, but it's still, like I said, possible. And you have to start preparing for these things. There have been some wacky market moves over the last 2 years since right after COVID. I mean, really wacky. As an example, I can't be the only one who remembers that oil prices back in April of 2020 went negative. I mean, they actually went, you want to see that right there? Look at that. I mean, that long red tail, that shows a negative price right there. You see that? Negative 40. Now, you couldn't have bought your gas or they weren't going to pay you to fill your tank up. But for a couple of minutes on that day, April of 2020, the futures market was showing a negative print on the futures price for oil. That's wacky. Now the bond market pulls off its biggest yield advancement in the history of America going back to 1792. That's wacky. Currencies, the Japanese yen, lowest point not too long ago, about a week or so ago, against the dollar that had been in 21 years. That's wacky. A lot of wacky behavior out there. So if you think this is just business as usual, if you think that you can just kind of ride this out without taking protective measures, without changing your strategies, that's wacky. Okay? The market is telling you aggressively, loudly, it's pounding the table. It's time to make changes. What kind of changes should you be making? It's time to become a legion in the Romulus Centurion nation. That's what it's time for. Okay? Real simple. We're not getting pounded by stocks like Target. That's not happening. As a matter of fact, we're making money. Let me walk you through a couple of trades that we've taken in the last few days. Before we get into these trades, I have a free educational video session about the Dow theory. Charles Dow, you may have heard of him. He invented the Dow Jones. Before we get into the trades that we will go over, I want to offer you something free. That's right, free. A free educational video session that I created back late last year regarding the Dow theory. The Dow theory is an investment method that was originated with Charles Dow. You may have heard of him. He invented the Dow Jones Industrial Average. He invented the Dow Jones Transportation Average. And over the next few years, before his death in 1902, he and some colleagues formulated a trading idea, a trading method, an investment method called the Dow theory. And this was expanded upon after he passed away greatly. Well, due to the evolution of time and markets, I have felt that the Dow theory needed an update, an upgrade, an improvement to kind of keep up with the times. And that's what I released back at the end of last year. I will offer you a free copy of this educational session. All you have to do is click the link right below, right there, fill out the form, just give us your name, email, and a free copy of that will be sent right to your email box. That's right to your email box. So, okay, how about a couple of trades that we've done recently? See, the market is absolutely full. I mean, hundreds and hundreds of companies, if not thousands, of companies that are rallying a bit from time to time, and then they get hit. And they're getting hit because they're primarily garbage. They're primarily crappy little companies that don't belong in the markets. And the markets right now are not in the mood or look to take advantage of upside activity on these stocks for too long. So they go up for a bit and then they get hit. Now here's one good example right here. Okay, this little stock built a little short position in it as it was going up, 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 and up. And then this morning got out of it. Didn't get out at the lows of 1922. I wish, not quite. But I covered that short at 1951, right about in there, for a 2.5% gain on that trade in about 2 days. And it was just nothing. Easy to manage, not a lot of time commitment. Just watch the stock rally for a bit and then hit it. Here's another one, not an individual stock. This is an exchange-traded fund, a basket of healthcare companies. You see it rallies, rallies, rallies. Shorted it right up and around in here. And then didn't get out at the lows, not even close. Got out quite a bit higher, right about there or so. Again, though, just an overnight trade, easy to manage, low time commitment, a couple more dollars in my pocket, and Bob's your uncle. So as I mentioned, there's a long list, hundreds if not thousands of companies out there that if they see a bit of a rally, let's take Facebook, that's a decent example in here. Investors see a little bit of a rally in the stock, like over this period of time from late April until whatever that high is in early May, and the stock comes right back down. Why is this continue? I mean, look at this one over here, okay? Same kind of thing. This is a smaller example right here, another smaller example here. Why is this happening? Because investors are just, let's face it, they're pissed off, okay? People have lost a ton of money. I mean, look, again, Target down 25% today, and it's not as if it's dropping 25% from its all-time highs. The stock was already considerably off the highs prior to today's drop. Same thing with Walmart. It was already considerably off the highs prior to yesterday's drop. Okay, investors are pissed off. They're very mad. They're upset. And when the stocks rally for a bit, like a Facebook has recently, people see, oh, I'm getting some of my money back. And I hate this company. I hate this stock. I'm tired of this. I'm losing money. It makes me sick. Well, whatever's making me sick, whatever's making me upset, whatever's pissing me off, I want to remove that. And the way to remove that is to sell. So that's why you continue to see periods of selling in these stocks until you get a selling climax, a capitulation event, which we haven't really seen yet. Little doses of it here and there on May 5th and the 9th. But until we really wring this towel out, that's where you're going to get. Companies are going to rally. And then the traders and investors that are losing money on these things and have for some time are going to take advantage of the rise in price. They're going to sell them, and the stocks are going to fall. So great methods are keep hunting for stocks like this. If you want to know more about that, one way is to, hey, I've got a free video on educational session about the Dow theory. Click the link below. You'll get the video. Plus, I can show you more about how to find stocks and trades just like this. Bear-proof your portfolio. There's a way to do it. Contact us. We'll help you. All right, this is General Romulus. This has been Ancient Roman Trading Secrets with me, Romulus. I'm heading back to ancient Rome, but I am looking forward to seeing you again tomorrow. That is all for now.